I've been trading gold live in front of hundreds of traders every day for almost 4 years now. What you're about to watch is part 1 of the exact course that I created for the traders inside Day Trading University in order to master gold. In this lesson, I'm going to cover how to determine whether or not gold is going up or down. And I'm going to show you how to decide if the trade that you're taking is either a short-term scalp or something you want to hold for a long-term swing trade. If at any time something is unclear in the video, just leave a comment below and I'll be happy to answer. I hope you guys enjoy. What is going on, traders, gold traders, hopefully future profitable gold traders after we go through this? I'm not going to waste any time hyping you up for this or anything like that. I want to get right into the nitty-gritty and I want to make this as valuable and helpful as possible for everybody going through this. With that being said, welcome to a gold trading mastery course. Some assumptions before starting. These are some things that I'm making assumptions of as I'm speaking to you right now throughout this course, right? I'm making the assumption that you have a general idea or base knowledge about trading and what it is. You understand what technical analysis is, or at least you've heard about it. I'm going to talk about things like fundamental analysis, sentiment analysis, intermarket analysis too, but I'm giving a little more examples of that. Technical analysis, I won't be going, actually, that's not true. We're going to be talking about how to take entries, but in general, you should have at least a basic understanding, right? You know how to find TradingView and use its basics tools. This is just because I'm going to be showing charts. I'm going to be talking about, we're going to be marking up support and resistance on gold, all that stuff. If you have no idea what TradingView is or how to mark up charts, or you've never seen this tool before, this might be a little more challenging for you. This is not for you if you're brand new to trading. If you're completely new to trading and you've never done anything to do with trading, I'll have other resources for you, whether it's on this page or somewhere on the website, or just find me on Instagram or social media, whatever. We will have other resources for like completely brand new beginner traders. This is not necessarily for you if that's you. With that being said, feel free to go through it. I just don't want you to be confused. And if you don't value your education and knowledge. Now, to be clear, this course is free, right? I understand that. So what I mean when I say valuing your education and knowledge, I mean like actually going through this, go through this video, go through these multiple videos rather, take notes, and then go through the entire thing a second time, and then start trading, and then go through it again. Take notes and take this seriously. And I'm not going to sit here and push like invest in yourself. Like, this isn't a fucking sales call or anything, but just value the information that you're being given. I can't tell you the amount of years it's taken me backtesting, journaling, trading every single day for years to understand this stuff in order to become profitable, mainly from trading gold consistently. So with that being said, let's get right into what we're going to cover for this next couple of videos. We're going to talk about how to create a bias on gold before looking for entries. This is really important. I'll talk about why it's important when we get into that topic, but basically you want to know the overall trend or the overall bias, meaning I'm looking for buys long-term or I'm looking for sells long-term. That way I know which trades I can hold short or which trades I can hold longer. That's how you get the bigger moves in the markets. Technical analysis and taking entries. We're going to cover how to mark up gold and technicals. We're going to cover what has an impact on gold. I'm going to talk about 7 or 8 different things that impact gold, and I'm going to show you real-world examples of each of those. Okay, so with that being said, let's get right into creating a bias for gold before getting into the technical analysis part. You need to understand, kind of like I hinted before, we have short-term versus a long-term bias. So what that means is I need to know what impacts gold in the short term, but I also need to know what impacts gold in the long term. Now I'm going to give you plenty of real-world examples of this. So don't worry on like short-term, long-term, what does that mean right now? I just want you to understand theory right now. We're going to make this real soon, okay? But this is how, like I said before, we can look for the trades following the long-term bias, but I can also capitalize on catching the pullbacks against the overall bias, because there are things that will happen that will move something like gold against the bias. But if I understand it's a short-term move, I'm just going to take it, get out, and then get back in the right direction. And I'll show you examples of this. Now, a long-term bias. An example of this would be the Federal Reserve starts raising interest rates. Now, if you don't know, I don't want to lose you on this. So if you don't know how interest rates impact gold, what the Federal Reserve is, or any of this stuff, it's okay, right? Oh, I actually have a typo here. It says the Federal starts raising rates. It's supposed to say the Federal Reserve. I apologize. I'm not going to restart just to fix that now. See, the Federal Reserve is the central bank for the United States, and interest rates have a very large impact on gold. I'm going to cover that when we get to the pieces that impact gold. But long-term bias, focusing on this right now, right? Interest rates are something that happen over time. It's not like they do it once and then it never happens again. When the Fed start raising interest rates, it started in 2022, they were doing it for 18 months, right? So this is a long-term bias. Higher rates are bearish for gold, meaning the higher interest rates go, I'd be looking for gold to drop. This would give me a long-term bias to look for gold sells. Does that make sense? This is just an example of a long-term bias. I'm not saying do that right now, depending on when you're watching the video. This is just an example for long-term bias. And if you take a look here, March 2022, just to be clear, I'll probably say this a few times throughout these videos. You can go back test, you can go Google search any of the dates I'm talking about, the moves on gold, the data I talk about, any of this. You can go fact check anything you want. This is all real world economic events or things that impacted gold and trades that we took based on that, right? So when I say that, if you look right here, March 2022, this was when the Federal Reserve first raised interest rates. And you can see this graph here shows us where they were as they kept raising rates. And you can see the date here, the time frame that you're looking at right now, right? Now, if I circle that area on gold, you can see where gold is here. And you can also see the overall direction of gold. Now, like I said, short-term versus long-term. If you take now this is just a line chart, but if you take a look at this pullback here, this pullback here, this push up here, this push here, this push, like those are all probably pretty good opportunities for buys in the short term. But if you remember the long-term bias, you get to just keep taking sells every time it comes up here when you see that shift of structure, which I'll talk about entries later. But having a bias, understanding how to create a bias, long-term and short-term, in my opinion, number one, extremely important to be able to do. And we'll show you a couple ways on how to do that. Now, the short-term bias. This would be an example of the Russia-Ukraine war, right? Geopolitical tensions can cause market fear. And I don't want you to get lost in this next bullet point that's about to come up, but gold is a safe haven. So this makes me want to take gold buys. I'm going to talk about this a little deeper later, but basically just understand that when there's market fear, investors typically pool their money into a safe haven like gold because gold is not volatile. So that's why you'll see gold go up or go bullish when there's market fear, right? Investors will put the money in there, and that's why day traders like us get to buy on margin and make profit on that, as investors are just pooling their money there because they don't want to have their money in a volatile asset. They want to protect their money when there's market fear. So this Russia-Ukraine war is an example of a short-term move in the markets, and I'll show you what that looks like on a chart in a minute. The war was announced. You can go back test all this. The war was announced right before the Fed's first rate hike, February 2022. This gives me a short-term buy bias, but I still have the long-term sell bias. Remember, this long-term sell bias comes from exactly what I just showed you. The Fed's just started raising rates, or they're about to start raising rates. The short-term comes from the Russia-Ukraine war that had just popped off. Now, if we take a look here, we have the war, then rate hikes. Once again, this is the same screenshot you just saw before. The rate hike started here. Rate hike started here. But for those who don't remember the date I just told you, February 2022, right? You can see the date right here. If I go straight up, look at gold. Look at this move right here. Pretty massive move to the upside on gold. This was about, I think it was like 600, 700 pips, possibly 800 pips before it recovered the entire move, right? And it recovered you can go back test this. It recovered the entire move within the same day and a half, if that. This is the daily time, the daily chart, right? So you have 1, 2 moves, maybe 3 days. So the overall trend was still looking for sells, but that short-term market fear gave me a reason to look for buys on gold, right? That's an example of short-term versus long-term bias. We're going to cover a lot more examples when we go over the things that impact gold. Like I said, there's 7 or 8 different things that I'm going to talk about and touch on that impact gold. And we will talk about short-term, long-term bias, and we'll make this come full circle. But understand that's what you want to know first. Excuse me. If you're looking to trade gold, how do you trade something if you don't know if it should be bullish or bearish, or if you're looking for buys or sells? This is how you capitalize on the right opportunities. Okay, so with that being said, the next section we're going to get into is technical analysis, and I'll see you in the next video.